At the same time, economic analysts have shared mixed reaction to the pause in U.S. import tariffs for the domestic environment. This development is seen as an opportunity for South Africa to deliberate on a long-term trade strategy. Economist and MD at ESG Analytics, Sifiso Skenjana, speaks to us about this. Thank you so much for your time, Sifiso. Uncertainty remaining despite the decision to pause the U.S. tariffs. How much of this is a negative for market activity and investor confidence?
Evening to Misang, and of course our viewers at home. I think it depends what you're trading. In terms of, we'll start with the traders. At this point in time, I think for currency traders, it must be an absolute havoc in their offices, just because they've got absolutely no trade signals on what actually can happen in the markets at this point in time, in terms of the positions that they hold, whether it's short positions or long positions. But I think, and I'll start with the trading position. In fact, and it's quite interesting because there's a document that came out last year already as Trump was expecting or anticipating coming into incumbency, from Harvard advisor Stephen Miran, where particularly one of the things there that was articulated in that, I think, 400-page document was talking about T-bills or treasury bills as particularly an opportunity for investors. In essence, they were talking about the fact that, they want to push investors to hold more long-term T-bills, in essence, simply, talking about, I guess, recognizing the fact that the move around the tariffs is going to actually create quite a big pressure point for long-term T-bills. And so a lot of investors are going to want their money up front. And therefore, I think the long-term yields are going to come under pressure. And so this is exactly what we're starting to see now play itself out as well. And so I think from a trading point of view, difficult space to really navigate at this point in time. But I think even when you're looking at other forms of market, whether you're an investor or whether you are a farmer in this particular context, and you wake up overnight and all the inventory that you had planned to put on a ship overnight certainly comes under pressure. Certainly, I think a difficult time for those people as well.
Absolutely tough times. And your views then on South Africa using this breather to devise a long-term trade strategy, as there are plans to engage with the U.S. What should be done in the interim so that South Africa is not particularly reliant?
I think it was quite clear that South Africa was going to try to take a conciliatory approach with the U.S. at this point in time, because it takes a long time to grow an avocado tree, and avocados are one of the things that we export to the U.S. Macadamia nuts, citrus as well. And so when you put all those agreements in place, it's not something that you can change. Export destinations are not things you can change overnight. And so I think certainly South Africa's strategy was going to try to find a short-term solve with the U.S. around the issues, while then devising what it looks like in the long term. I think when we look at some of the affected sectors, other affected sectors, we see critical minerals are certainly, I think, still, I guess, tariff exempt in this particular point of view. Automotives is an interesting one, because we saw in the US, in the EU rather, that they've started easing some of the conditions that they put on EVs towards 2030. Which actually creates an interesting space for South Africa for export, I guess, substitution in the context of the EU, particularly because of the internal combustion engines that we couldn't take to the EU. We're now also exploring, of course, what it means in terms of moving some of those exports into the continent. And so I think South Africa was always going to take some type of conciliatory approach from a short-term point of view, while starting to think about, in the event that AGOA doesn't get renewed in September, etc., what do we do? But I think there's something really important for us to start to look at as well, is that what Trump is, the two things that Trump is not looking at, and it's come out one from Hong Kong earlier on today, is that this is only on goods and not trading on services as well. And so in essence, the thing that he's looking at, his trade deficit, is only on goods and not on services. And the US does trade a lot of services as well. And in fact, South Africa, even if you look at the business process outsourcing sector, the US is one of the large export destinations for that. And so it's quite interesting how they look at trade in a very bizarre way. But also there's something in economics we talk about as the reveal comparative advantage, which in essence talks about the cost of, in essence, the cost of delivering your goods that in essence makes your goods particularly competitive. The US is going to become incredibly uncompetitive from an RCA point of view, and they thought this was supposed to weaken the dollar to make their RCAs a little bit higher. and it's emerging that they're going to actually have weaker RCAs on the back of what Trump is doing. And so I think certainly it's going to be an interesting poker game to watch, but I think the outcomes are not going to go well for the US in the medium term.
Unintended consequences. As we wrap up, let's also briefly touch on the global economic impact of this ongoing trade battle between the US and China, because, of course, those tariffs have not been halted there, but it changes the entire dynamics of world economics and trade.
No, absolutely. And I mean, I think we saw now that I think Apple came out and said that cost of assembly of an Apple iPhone will move from about $500 to close to 850. And so already cost of goods is going to increase for certain goods as well. That's the one thing. China, with what they have come out, not just on the 84% tariffs, but also on the critical minerals which are necessary in all of the stuff that's happening in the US from a green economy point of view. So EVs, solar, et cetera. China has now created almost a moratorium on those, saying that we want to see where the goods are going and a whole lot of things that must happen before we actually release those goods. And of course, that's going to create a massive pressure point because China is I think they control close to about 80% of the critical minerals that are necessary in terms of the green transition. And so that's going to create, I think, a supply chain pressure point. It's going to elevate prices. We're happy that, of course, the oil prices have receded a little bit because we, at a local level, have imported inflation from that perspective. But I think it's also going to translate into other things as well. And so I think the couple of pressure points that are going to come in the South African context. But I think globally, I mean, we heard Putin as well saying that the ship has sailed in terms of America trying to curtail China's dominance. And certainly, I think it really is going to show that that there's going to be a shift in the global power dynamic, geopolitical power dynamic. And I think the US is really going to need to reimagine what power looks like for them and what structural transformation looks for them in terms of what portions of their economy from a primary, secondary, and tertiary enables them to lead the global space. And currently, right now, they're leading the global space from an ideas point of view, which is the tertiary sector. And I think they're really going to need to think about double clicking on that because I think they've lost the secondary manufacturing as well as they've lost the primary at this point in time.
Phew, what a time. Thank you, as always, for your input. Sifiso Skenjana is the MD at ESG Analytics. They're talking us through the latest developments around the global trade tensions.